Hey guys, welcome back to the channel. Today's video, we're going to be looking at cryptocurrency and the common investment guides. Now, overall, cryptocurrency does have a decent amount of risk that comes with it. If you were an investor, if you actually started investing in the market or in cryptocurrency when it was, the 40s, the 50s, the $60,000 price tag for Bitcoin, chances are when you look at where it went down to, if you didn't get the money out of there soon enough, or if you rode it all the way down just to see it come back to the mid 30s, which is where it has been kind of hovering at. Now, one thing we're going to look at is Gen Z. Now, the most common investment of Gen Z is cryptocurrency, guys. Now, this is the generation, of course, that grew up with technology, with social media, with influencers, with a lot more access and accessibility to a lot of these things. Crypto exchanges, many years ago, didn't really have the holding that they have right now. When you look at Coinbase, when you look at Binance, when you look at a lot of different ones, crypto.com, a lot of them have very easy platforms, very easy to understand, relatively simple to trade once you get the money into the markets. If you need help, guys, there is a ton of content out there to see it. Now, we want to go into kind of break down Gen Z and what we are seeing, guys. Now, overall, financial advisors, which I am not, say to hold approximately 1 to 5% of your portfolio in cryptocurrency. So they are not going the opposite fence saying cryptocurrency is bad. Nobody should hold cryptocurrency. The thing right now is because of the volatility that cryptocurrency does possess, is really the notion behind it. So also the Tuesday that just passed, the SEC actually sued Coinbase. We also seen the same thing with Binance. Coinbase is actually the largest US crypto exchange, alleging the company was selling investment securities without being registered. Now, this might look a little bit bad for the companies, for Coinbase, for Binance, things of that nature. However, this is what is going to provide the legitimacy when it comes to cryptocurrencies in the space is going to be a little bit of regulation. I know the whole deregulated, not knowing where the money's coming or going or things of that nature. There has to be something that is going to provide the legitimacy behind cryptocurrency itself. Now, looking again at Gen Z, 55% of Gen Z is currently invested in cryptocurrency. That is right, guys. 55% of Gen Z investors are currently in cryptocurrency. Now, Gen Z is, of course, born the late 1990s and into the 21st century, meaning they are the mid 20s up to 25, 27 years of age, depending what you look at. Now, thinking of that, individual stocks are held 41% of the time from these investors. So not only are we putting a lot of money into cryptocurrency as a large percentage, we're also putting a large percentage of money into individual stocks, which again can be a lot more volatile than we see with mutual funds, than we see with ETFs, just because again of the volatility of holding a single stock. So if you have one stock and the stock does have issues, if there's lawsuits, if there's something that is bad or detrimental that happens to that company, chances are you're going to be losing a considerable amount of money in a very, very fast aspect with just holding one stock. That is the why, guys, I cannot stress it enough. Diversifying the portfolio is huge. Now, looking at comparison, mutual funds were most commonly held by Gen Z in the investors, which were 65, born in 1965 to 1980. 47% held mutual funds and only 43% hold individual stocks, as well as 39% holding cryptocurrency. So the individual stocks and the cryptocurrencies are still out there. However, I think with this data, it is really a little bit more skewed because of if they're counting 401ks, if they're counting things of that nature that don't give you the full gambit or the full ability to invest in individual stocks or cryptocurrency, which I know my plan does not at all. Now, Gen Z's relatively high concentration in cryptocurrency, which is a majority of Bitcoin and Ethereum, and individual stocks can be a little bit of a cause for concern because of the management of risk over a longer time, essentially. Mutual funds, ETFs have a very good track record and a long growth record. And again, it seems like a lot of people in social media are kind of spinning. And if you look anywhere on YouTube, if you look at a lot of different places, they'll say, hey, I made $100,000 overnight by buying Bitcoin. I'm trading Bitcoin, doing this. Be careful, guys. A lot of those things are an absolute losing game, guys. The risk is through the roof, and you're talking about possibly the 1% or even less than the 1% that made a fortune off of buying at the exact right time. Most of the people within the crypto space, unfortunately, do lose money. The other thing to be careful about when it comes to that crypto space is making sure, guys, that you have all of your security in place. And this is where I'm kind of hoping that the little bit of regulation or the little bit of legitimacy to the cryptocurrencies are going to provide a little bit of the security for cryptocurrency itself, which is going to be huge. Now, Generation Z, remember, is the first generation to really grow up during the age of technology. Social media, absolutely huge. When you look at TikTok, when you look at Instagram, when you look at YouTube, when you look at Facebook, you are inundated on a daily basis with an incredible amount of social media that is out there. You're looking at ads, you're looking at marketing. When you look at crypto.com, when you look at Coinbase, there are a lot of marketing aspects out there that are just looking to compete for your dollar. Now, we've also witnessed the big rise, guys, of a lot of technical giants. When you look at Alphabet, when you look at Apple, when you look at Meta, now these are digital companies that are kind of almost diversified in themselves because they cover such a huge market and a huge market cap. Investing in some individual stocks, well, I don't advise it. When I look at things like the S&P 500, the ETF, which I do invest in, guys, they hold Apple, they hold Meta, they hold, a lot of different companies are falling within that S&P 500 fund, which can be really spreading out that diversification across different markets. Now, getting back to cryptocurrency, it can be an incredibly volatile asset. So Bitcoin peaked around $69,000, currently trading around $27,000. So if you put, let's say, $100,000 into that cryptocurrency, you're looking at an over 50%, almost a 60, maybe even edging on 70% decline of your assets. Now, thinking about, again, the market overall, generally, there has been no time, or really almost no time, that I have seen, a 50, 60, 70% decline in the US markets over, I'm not even sure during the Great Depression if that might have been one of the only times, because I don't even think in the housing market when that bubbled, even the tech bubbles, we weren't down looking at, 70% or greater, really the loss in that aspect. So guys, again, the SEC, this is really one of the taking actions against exchanges. Again, we've seen it from Coinbase, we've seen it for Binance. They don't carry the same protection, and that is what the SEC is really looking at. Unregistered exchanges don't carry the same protection for investors as registered ones, such as the New York Stock Exchange that sells stocks, securities, things of that nature. And registered exchanges offer a financial backstop, which again, if the exchange was to fail, it's not going to go completely down because there is things financially in place to kind of stop it. Now, again, even though the investigations are out there, a lot of things are going around. A lot of people are still going to invest in cryptocurrency. I do myself, guys. I love cryptocurrency. Most of you know that I have Bitcoin, I have Ethereum, I have Illuvium. I have a couple cryptocurrencies out there, even looking at some of the stuff that are not so much, playing Splinterlands, Guild of Guardians, things of that nature. There are a lot of things out there. You just have to be very cautious when it comes to investing, how much you're tying up, and what is really the risk tolerance that you're willing to have when it comes to the cryptocurrency. Sorry guys, so that'll do it for today's video. Let me know in the comments what you guys think, and as always, thank you guys for watching.